yo papa. Nikwe loku chenda.
Petit son daka, petit son daka. Petit son daka, petit son daka. Petit son daka, petit son daka. Petit son daka, petit son daka.
On Power FM. Voice of the People is a dynamic and interactive radio phoning show that gives listeners a platform to voice their opinions on current affairs, social issues, and community concerns. With engaging discussions, expert insights, real-time audience participation. Voice of the People.
This is Voice of the People on the Power Breakfast on 91.3, and we are currently live. That is via our Facebook page on Power FM Zambia and on Bits TV channel 92 on Topstar and Fortress with my co-host Patrick today on Voice of the People. The Food Reserve Agency (FRA) has increased the purchase price for maize for the 2025 marketing season. Now, the new price for a 50-kilogram bag of white maize is now selling at 340 kwacha, up by 10 kwacha from last year's 330 kwacha. In this initial phase, the agency plans to purchase approximately 543,000 metric tons of white maize. Now, today on Voice of the People, we are joined by economist Mr. Kelvin Chisanga to discuss the FRA's maize price announcement as well as other pressing issues, including recent fuel price reduction, mid-meal price adjustments, as well as the JCTR Basic Needs Nutrition Basket BNNB report for May 2025.
A very good morning to you, Mr. Chisanga. How are you doing?
I'm doing very well. I feel power here.
Awesome stuff. Let's get right into it. What is your assessment of the maize price situation?
Okay, so the beginning point is that we have done a very good substantial impact in terms of production, where we have a good output, which is actually talking of 3.6 million metric tons. I would say congratulations to the Zambians who have actually participated into this, and it's a good move for us, considering that we are coming from a very dramatic
drought situation.
Drought situation, yes, and also quite a very tense situation regarding the food insecurity aspect.
Did you focus this as an economist or a social observer?
Well, there were some considerations to see this coming, but not to the extent that we have seen. Obviously, we are talking of those times we were talking of something like 3 million metric tons, but a surplus of 600. It's something that is actually well positioned for Zambia to actually even poster a very good moderation in terms of growth. Yeah, and also it speaks of where we are coming from, because obviously we don't have so much of the reserves, so that is something that we can now moderate from that perspective as well.
Yes. Going back just maybe on the floor price of maize, a couple of years back there was an outcry to say, one, the price has been increased, and then two, obviously the price of milling went up. But the rationale then was that, look, if we can increase production, the price will ultimately go down. That is the price of milling. What do you say to the pundits that were against the increment of the full price of maize?
Okay, maybe just to give you a context, I think the actual cost factors around maize is quite higher compared to the price that has been pegged. And obviously, most of the people, including the Bank of Zambia, we are estimating to have a price floor of about 380, which should have been reflective of the import costs. But looking at what it is right now, it's more of a psychological price compared to the effect or cost-benefit factors of production. So it has raised a lot of questions. Of course, it is also something that is concerning, looking at how we can now foster the future investment in this sector. Yes.
And the other question is the increase formidable, the 10 kwacha increase from 340 to 300 and from 330 rather to 340. Is it that much, a 10 kwacha?
Well, the 3% increment from last year's purchase, and expect that we have drawn the background of dramatic events that happened last year, where we had less food supplies, and also which were also complemented with a low economic profile. This cannot be justifiable, especially looking at how, if you want to trigger the appetite and interest in the sector. We needed to have at least landed the cost at 370 or 375, or even much higher compared to what we are seeing today. Because, as I mentioned, this now comes out to be a reflective element of psychological price, as opposed to reflecting the cost input that should have been factored from there.
But another reflection that can be factored is the fact that we are producing a substantial amount of our own fertilizer.
Maybe going
locally.
Maybe going forward, yes, this could be a spillover effect that could come as we get to the massive production of fertilizer or chemicals in the sector. Mm-hmm. And again, also, it's not just the aspect of isolating fertilizer. There are also other complex factors that can also play into this. So if we basically also work around the cost of seeds, cost of fuel to remain constant or sustained, I think that to be able to speak into all those areas as it is right now.
But as we speak, the cost of fuel has gone down. The cost of you mentioned fuel. What was the inputs basically are going down. We're producing the bulk of fertilizer. Isn't it therefore to say, I know you're mentioning 370, 380, but all these factors considered, wouldn't you say that the 10 kwacha increment is justifiable at this stage in time?
Well, if you are to go into a context, for example, if you look at the aspect to do with the FISIP itself, we are talking of about 7 billion Zambian kwacha being flown into this, which is half of the Ministry of Agriculture budget. And again, it also goes with how we should be able to have monitored, because you see, the gist of the matter here is that we are flowing that amount of money, but again, when you are looking at the output side in terms of trying to see the effect, we are not able to quantify if it's correlating with the input. Meaning, what we are basically working out is an assumption to say we are funding the farmers out there. But a majority of people that are actually contributing to the national harvest basket are actually standing on the NANI FISIP elements, which implies to say that about 70% of what we are seeing in the national food basket of harvest is actually coming from the private and commercial farmers. Then those who are supported on the FISIP, they are maybe standing at 45 or even less, 40%, and that now speaks into what we're trying to say. If we are thinking of saying subsidizing at input level, then expect to control the price at output level, that also becomes a challenging factor. So what needs to be done here is to now do a proper assessment, show a model of assessment based on what we are putting in from the national budget side. That is 7 billion. Are we getting the 7 billion the way it's supposed to come, or are we even making profit out of that 7 billion? So that is the question that now need to be asked. Otherwise, if we use a matrix of saying, since we are subsidizing the farming inputs, that then becomes difficult. And this is why we are finding it very challenging as well.
Then the question that begs is, could we altogether do away with FISIP or maybe channel that 7 billion into other areas of the agriculture sector?
As I mentioned, FISIP, it's an important aspiration that need to be anchored from there. Maybe to give you a context is that Zambia at some point went into importation of yellow maize. At some point, when there was an introduction of FISIP, we have seen a substantial and significant improvement in the food supply, particularly the staple food maize. And much to this, also there has been extension of having even soya beans and sugar beans and many others, which are now in abundance to a point where we're now aggregating in the industry some of these products that we are producing from the primary source of agriculture. So now, to just give you a context, if we basically look at where we can plan to measure the impact of FISIP from the output side, it can help us. How much are we producing from the national basket of harvest from FISIPU. I think that will be more moderating to even excel some efforts that should be able to work out from there. Then in terms of trying to work around other alternative models of FISIPU, it would be more ideal to take, if it's possible, to take that 7 billion, for example, in the current government expenditure column, to take it into maybe fertilizer production directly in the manufacturing sector, as opposed to the intervention that have actually been happening from different angles.
Okay, so looking at the increase now, will this encourage more farmers to sell to FRA?
Well, the problem there is that the 3% is not inspiring. Of course, some will be selling, but again, it hampers the progressive nature that FRA should be able to underscore in this, because obviously what will happen now is that there will be mixed feelings, and of course it's a situation where we are going to have willing buyer, willing seller. If people are not comfortable with the price that has been set as a benchmark now, I think more briefcase buyers will jump on this opportunity, and much to this also, others have actually been calling out to actually export maize grain because they feel it's more appetizing and demanding outside there. So it's important that maybe we need also to factor a lot of aspect into pricing benchmark. Otherwise, we'll end up now losing out. Even the target that of 543 metric tons won't be able to be achievable because obviously at some point
that is what 5 million you mean.
For FLI's mandate,
okay.
We are buying mandate this year. So it becomes difficult. So again, it's an act of balance that need to be worked out from there to see how are we faring in terms of the market. Because again, if I'm a farmer, I've done so much of the labor intensity requirements in the production of maize, then I end up now coming to have this 3%. It doesn't make sense.
But Mr. Nsaka, we're coming from a backdrop of where the floor price of maize was very low 2, 3, 4 years ago. Well, it went to above 300. We were buying milli-meal at over 300 kwacha. It's only now that it's dropping. We have a bumper harvest, but the argument, don't you think the rationale is also to say, look, if we increase it to 380, 400, we could trigger an increment of the price of milli-meal. So maybe let's be, walking a very thin line. We're supporting the farmer, yes, but we're also trying to reduce the price of milli-meal.
Okay, maybe let me just give you a context here.
Sure.
FLI sets prices on the different factors that we can put on the table. The key fundamental focus here is 1, to sustain the market. Then 2, to ensure that we have food security.
Right.
Then 3, we also need to ensure that we basically do input recovery, meaning we need to sustain our model of business. Farming has now been taken to be a very serious critical business endeavors. And from that perspective, I think it's more important to also look at balancing actors into some of these aspects, especially when it comes to the issues of making sure that food component and even just the economic growth should be able to be anchored all from that perspective. If we are to basically look at the way Zambia has been having even inflationary effect, it's because food is something that plays a critical component on the table. Mm-hmm. Remember when we were going through food insecurity, large component of it was coming as a result of food inflation. Mm-hmm. What has really underpinned the food inflation from that perspective? It's maize. Right now, as we speak, we are still having a small portion that need to finish up in terms of importation from Tanzania, which will make up a stock value of about 4 million metric tons. That's what we are speaking in aggregate terms. So if we basically have a special grip around food materials, I think it will be able to help us even to control a number of microeconomic factors and variables.
All right. And also, you did mention that it can emanate from food security. How would this impact food security in our country?
Okay, so we understand very well that food basket and even just generally food security aspect underpins a critical element. If you look at the budget, even from the national budget point of view, our central government is function. We are talking of this to be a very special complementary factor, which in any case, as I mentioned, the matrices that play around food security underpins on the microeconomic objectives. For us to sustain the goodwill and the conducive policy environment, food plays a part. It's an essential component that really plays a critical function of primary resource in industries. Today we are talking of companies that are even exporting from Zambia. We can think of maybe say a typical example. I don't want to advertise the company here because you think as if you have been paid. But the bottom line that we are now importing critical goods that are even now complemented strongly with our food processes from here. Meaning what we see is a situation where once we have these robust efforts around food contentment measures, then we'll be able to control a number of key factors, even when it comes to the forex market. We talk of maybe even of course the inflation has been a key factor because it really plays out into the health of the economy and many others. I can assure you to say without food, none of us will even be here talking because food is like fuel to a human being.
This is Voice of the People on Power FM 91.3, also live on Beach TV, channel 92 on Topster. Our guest this morning is economist Kelvin Nsaka. Let's switch gears, sir, if we may. Let's talk about the decrease in the pump price of fuel. Well, what's your take on that?
Okay, so we've seen that the fuel supplies on the global market has actually been going on a downward spin, which has now given that vibrating energy also for our ERB here to actually work out a model to lower and pass on the effect from that perspective. It's coming from a background of low demand in the global market, which is also strongly complemented in the local market here with the precision of kwacha or stability of the exchange market. And again, also the interventions that we have also been able to endeavor with engaging with different stakeholders into this is also what is actually speaking strongly into what we are seeing. So the decrease is basically going to speak into good elements at household level in terms of trying to have disposable income. People that are commuting and also transport costs are going to be reduced, meaning we will not be able to spend as you have been spending all the time. Obviously, the pass-through effect will be able to work out a number of other sentimental values like pushing on healthcare, education, and many others. That is from also a perspective of a business as well. So meaning when it comes to the business, we'll be able now to see stability in the production of most of these essential goods. Even when you look at the core base as Zambia, mining sectors being heavily intensive on the energy aspect, so that now will be able to boost output production and also at least will sustain the job creation as well from there. We have more sustainable means of income. Even when it comes to supporting government taxation structure, we know that the more we are constantly doing business, learning production and all those things, I think that speaks well formulated efforts from that perspective, meaning that the economic buoyancy will still stand, and we have to, record some good economic marks or value from there.
How long do you think it's going to stabilize for?
Okay, I'm sure the interventions that we have seen, because obviously we have seen that the deceleration in the fuel price started last month calendar and extending to this. Actually, the jump in this month has been phenomenal. Of course, speaking from the perspective of low demand. I think it's also inquires that maybe it also depends with how we can share models of resilience. What we need to do in terms of what's happening, of course, maybe just to jump your question, is to look at how can we come up with stabilization and recovery process in terms of maybe creating a fund that should be able to sustain there. We had one which actually depleted. So maybe
the sovereign fund.
Yes, then this should be the talk that we need now to drive with this atmosphere, which is actually positive. Then again, the aspect that we need to do is to also look at forward contracts that need to be anchored from there. Maybe the issue also is that if government can accelerate steps with regard to debt restructuring process, it can give us a substantial standing to actually even negotiate with the other governments or other suppliers in the market, so that government can stand to be a guarantor in some of these deals, if it's possible that this can work out like that.
The question that's also lingering around this situation is, do you think the open bidding of the Tazama pipeline has also contributed to the price drop?
Yeah, so as I mentioned, the interventions in policy reforms and also the wide engagement of key stakeholders, of course, even the expansion of energy policy options is what is actually augmenting to the positive feeling that we are seeing in the commodity. And this is the reason why maybe some of these are now bearing effect as well. I'm sure with the continuous interventions that we should be able to see, we'll be able to anchor and stabilize the commodity price.
If they stabilize, let's say we have the prices that people are vying for right now, will it reflect an increase on the nominal GDP, if we can put it in context?
Yeah, so fuel plays a critical component. It is a basic factor that lands in all sectors of the economy. You see, coming here, I had to use fuel, though of course it also depends with the kind of intervention that we are working out with in terms of fuel. For a good starter, if we can sustain the price of diesel, because diesel is what drives this economy. We import a lot of diesel to land the gensets and many other aspects. If it's petrol, it's just a small portion which actually goes with the motor vehicles and all that. But what drives this economy is diesel. If we can anchor that, I think it will speak very well. And not only that, also the aspect to do with the fuel, I think it brings a number of different complementing factors on the table. In the Zambian case, for us to see a sustained economic growth, we need to, first of all, have strong grip on one, fuel, two, on forex market, then three, we make sure that inflation does not go out of the roof. If we can anchor some of these key fundamental factors, I think the focus should be able to give us a very well-informed output from there. Meaning what we can actually see is that I think these are the key elements that can even help us now to change even the narrative on the GDP profile. So if fuel can be anchored even just for 5 months or even 4 months minimum, I think the GDP level will be able to be positively.
Do you think we'll be faring well with investor confidence? We'll have more investors?
Yes, because you see, the component of fuel is one of the best elements that plays a critical element from there, because it's from the fuel that we're able to, one, lower the cost of consumptive items. When you produce an item like, for example, mini meal, you turn it from maize grain into mini meal. Obviously, when you're landing in the genset, for example, in the midst of this power deficit that we experience with electricity, obviously you pass through the effect, and once you do that, you have more demands. You create that demand from the perspective of the consumption, and as you do more volumes in terms of trade, in terms of sales, you create that confidence as well, and that now plays very well with the government expectation of making sure that people are also obliged with tax payment. And of course, today's tax model is more predictable because you do the smart invoice. Any transaction that you do, it's able to be visible to say this is what's happening. So you are able to have even government support from that perspective, meaning you're not going even to have difficulties, when you have more volume of activities on the business side.
Mr. Nsaka, speaking of smart things, somebody right now sitting in a bus is listening, and okay, Mr. Nsaka is making sense. But if the price of diesel and fuel drops, how come the price of the bus fare rarely drops? On a lighter note.
Okay, so two things happening here. Maybe I should be able to declare one thing before I get to this. One of the things that have actually been so much advocated for, it's the aspect to stabilize the monthly fuel review. I call it cost calculator. Yeah, because the issue is that the moment we took this aspect of reviewing fuel on a monthly basis, we brought in an aspect of unpredictability, meaning we cannot predict what happens in the next month. So you can imagine if fuel has reduced today, it does not imply to say that the pass-through effect will be almost immediately or start transmitting light from there. In the Zambian case, any reduction, be it even from the forex market, if we receive some good comparative case around kwacha depreciating, appreciating, we only have to see the base effect or the base effect after a period of maybe maximum of 3 months. Meaning, if there is a deduction that is taking place in key commodities, we cannot just get to our harvest, the result right there and then. It takes a bit of time. So it's the same with the bus fare. If they reduce fuel today, who knows, in the next 3 months from now, fuel can be shooting up. Meaning, we'll work now with that fluctuating model. Of course, the reduction should be able to be commanded when fuel is being reduced, like the way it is happening. But that is also a process which is a consultative process as well with key stakeholders. I remember there must be LATSA and a few others, including the bus owners, to sit down and see where are we sitting as well. So the monthly fuel reviews also has a difficult situation as well with many key services and the commodities. Meaning, even when it has come to be like this, sometimes some of these key sectors, they also form some relatively difficult situation as well, in a way that we basically see a situation where they have to agree the price range because they don't want to be affected. So there is that agreement that need to be done. So even in the case of bus fare, it's not something that can just jump from nowhere to drop. No, it has to be a moderate way. Maybe I can even reduce a small amount, like 1 kwacha, 2 kwacha. Yeah, so that's what can happen because we are not certain what will happen in the next calendar month.
Go ahead.
Does that also apply to the goods that are being imported in the country? Some might want to argue, those that are entrepreneurs, that you see the way the prices might change in a way. They order goods at a different price, and that is outside the country, might be Tanzania and Dubai, and then they are selling them at a different price. So when everything decreases, it affects their business. At the end, they won't make returns. So how can that work?
So I get your point. The context here is that when you buy something, for example, I'm just going to give you a dearest example in this case. A dollar is selling at 29 kwacha, 1 unit of dollar. If I buy goods worth at that pricing index, when I bring them here, obviously I want to make a recap, get my money back and all the costs that were involved. So even when the kwacha drops maybe to 25 kwacha to a dollar, it won't be an almost immediate impact that will be able to work out from there. What will happen is that I have to wait, maybe wait to make sure that I make my money come back, because the forex market is very volatile. It can even somersault maybe in the next few 10 days after.
Okay, you have to just hold that thought.
Yeah, sure.
Hello, it's you to the Power Breakfast. Good morning. Hello, good morning you're through to the Power Breakfast. Okay, we seem to have a challenge there. All right, what were you saying? You can just continue.
What I was saying, that if you bought something that actually demanded 29 kwacha.
Yes, go ahead.
29 kwacha to a unit of US dollar, and then all of a sudden the kwacha drops to 25 to a unit of US dollar. You cannot, from the business perspective, you cannot change automatically to start fitting into that. You have to wait a bit, because again, the forex market changes. It's changes like wind. It can be like what we are calling climate change.
Yes.
You know. So what I'm trying to say here is that it's important also to look at the matrix that works in the Zambian economy. What really plays out is that once you have reduction either in fuel or in forex market or in whatever form of positive development that could have actually been happening there, it takes a base effect also in place, meaning what will happen is that it will take a bit of time for us to have a reflective reduction.
Okay, all right. This is a Power Breakfast. You can be part of the conversation by also going through to our social media platform on Power FM Zambia Facebook page. You can leave your comment as well. We are joined in the studio by Mr. Kelvin Nsaka, who is an economist, to discuss the FRA's maize prices. Hello, it's you to the Power Breakfast. Good morning.
Yes, good morning.
Good morning. How are you doing? Tibwina nice. Tell us your name and where you're calling us from, please. Okay, go ahead with the contribution.
Yeah, sometimes we disagree with JCPR saying this month inflation rate has been increased to 11,000 and some way. So now, on this matter, we are different categories in this country. Yeah, the outfall and who have 11,000 per month. You know why we are saying some of us, we are laymen, we are not economists like you, but this time things have been reduced. Even look at millions have been reduced. Beans have been reduced. Everything which is the crops have been reduced. Why? This time is a harvesting time. Okay? When time of harvesting, who's going to buy millions? Areas and Arima Umbu guys are going to Chicago. And that's why I want to be so the demand has been lost because of packaging. So I mean that then also that then the last three. Yes, it's true. Acknowledge that more business man as well. Say that it's too costly doing business in this country. We need to reduce more because exchange rate is talking about today. 27 flat. If you talk about 27 flat, if I buy 1,000 years.
Okay, we seem to be having a bad connection there, but I think you got the gist of the question. He's referring to the Jesuit Center for Theological Reflection (JCTR) report, which says that the nutritional basket, monthly nutritional basket, is currently at 11,272 kwacha. What your thoughts on that?
Okay, so the issue here is that I think it also goes with the regional calculation, if I can put it in that way loosely. Sometimes I tend to also disagree with the Justice EALA on the food basket on their review, because sometimes you only find that they are mirroring maybe places like Nsaka. But what about maybe Mansa, Chipata, Shangombo.
Are you saying that the report is not comprehensive enough?
For me, I think that is what I should be able to say, but I feel they give us a reflective feeling of what is really taking place there. Maybe we need to have more tangible material in terms of what really plays out with their assessment. Of course, yes, they give us a shape for us to look at and also to create something that can be compelling action in terms of what really happens there. And it gives a groom situation to build something fundamentally very well from there, especially when we are looking at tackling most of the pressing commodities. For example, they can mention to say because of winter we are having charcoal prices going upward or something like that. So you have got a pointing benchmark. So what I mean by saying this is that I think, yes, looking at the cost factors that we see in most of the things, and maybe I will also concur with him. He mentioned to say the issue of high cost in Zambia. It's because we've got so much of duplication, even when it comes to licensing and many other aspects. It's important that we need to look at how best can we create a system or a business environment that should be able to speak of growth given. What I mean by saying that if my sister here sets up a company, there must be a leverage for her to actually spend a bit of more time for her to go into a tax blanket. Meaning, at a point she's going to a tax blanket, there must be some substantial performance that should be able now to come through to say, okay, now she's stable with a small capital to sustain. That is what we need to do, and that is the way we need now even to activate the local content policy, meaning that policy should speak into empowering our local Zambian.
But when you speak of policies, Mr. Sanga, how long does it take to remove some of these rigidities, as the head of state has referred to, in the cost of doing business? I was watching a clip just the other day of the Botswanan president who was saying, look, I'm going to bypass some of these things, and I'm saying it publicly. How long? Surely it can't take 3 years, 5 years to remove rigidities in order for you and I to be able to go into a business space and try to do something.
Maybe the nature of policy structure. I think I'm more firm to say that Zambia needs a strong collaborative public-private police ties. That is coming from the point where we have seen that long time ago, the government system and operatives used to actually power
You just have to hold that thought.
Sure.
We do have a caller. Hello, it's you to the Power Breakfast. Good morning. Okay, yeah, well, you can continue with your point.
I hope I can remember the
Please.
Yeah, so maybe looking at your question that you had asked earlier in terms of how long it takes to change certain policies to suit in of other things that need to be put in place there. Of course, what I'm trying to put across here is that if you identify a problem within maybe, for example, insurance, for you to make a change to effect, maybe say, for example, we have seen much of or many of Zambian people, maybe they don't have so much of the capital base. Then the foreign-based foreigners, investors, might be able to have huge capital resource to combine with a Zambian, but because this policy was favored for a Zambian, and it becomes a challenge for us to meet with the claims and many other aspects within the sector. So now, with that policy which is diffusing the foreign combination, it becomes a challenge for us to make a change. It has to take 3 years. That is what most of the policies are working. So you find that along the way, as we implement that policy, it starts failing to work out right from the start. The time when we want to refine it, we would have found another challenge also that need to be cured. So that is what we are working on. So if there can be a subsidiary law that can allow some of these policies to be changed, even in the middle way, it can actually help us.
As we conclude, and because unfortunately we're running out of time, let's quickly switch gears and talk about constitutional amendments and whatnot. Briefly,
Sure.
how might these proposed constitutional amendments affect our economic stability, investor confidence, and whatnot?
Okay, so for me, I will speak it from the blanket perspective.
Right.
Yeah. So from an economic perspective, when you are making sharp changes in the policy, of course, the dynamics that come out from there is that people tend to actually slow down economic activities somehow, especially those that are looking at which size of the scale is this political element is coming from. Especially when you look at the setup that we have actually been able to build over time. If you remember, the Build 10, we had a number of economic agents who actually started thinking through to say, where are we going? It's a similar case with the 2019. 2019, you may be privy to know that there was a deliberation on sales tax, removing from VAT sales tax. I will tell you from the calculation that we did 8 months down the line within that fiscal year in 2019, a lot of people did not perform at peak, even including economic agents. Big guys in the economy were speculating to see, let's wait and see where we're going. So it's the same thing with this one. At a point when Zambia is growing steadily with its economic fundamentals, having a very good inflation rate coming down, sustaining policy rate, having exchange rate which is a little bit stable in a way, and a number of key economic factors, even when you look at the government performance in terms of budget implementation methods, everything is standing perfect. Of course, it's not something that we should be able to trigger to say, now we are performing this way, let's now go into this. I'll tell you, we are now shifting our economic focus into political consultations, meaning what we're going to do is more of political discussion as opposed to economic reforms. That is what's going to happen.
And we'll have to leave it at that. Our guest this morning on Voice of the People, economist Kelvin Nsaka, who was here to discuss the FRA's maize price announcement, as well as other pressing issues, including the recent fuel price reduction, minimum price adjustments, as well as the JCTR basic needs and nutrition basket. Mr. Nsaka, many thanks for coming through this morning.
Thank you so much. My pleasure.
My name is Patrick Chifwamba, joining the Queens of Breakfast this morning on Voice of the People. It continues to 10. Good morning.
Voice of the People is a dynamic and interactive radio phoning show that gives listeners a platform to voice their opinions on current affairs, social issues, and community concerns. With engaging